Yes, students. Now we will discuss the questions on total income and tax liability. We have already discussed till question number 5. Now we will continue from 6. Now from now on, whatever we will be discussing is the total income questions from RTP. That is the past revision test papers. So straight away we will get into question number 6. Okay, let me read the requirement once quickly. Mr. Akshay has shifted out of default tax regime and wants to pay tax under normal provisions of the act. Means they are telling that he wants to follow optional scheme. Okay. What is the information? Mr. Akshay, aged 59 years, will not play much role here. An Indian citizen, somewhere it may play a role, traveled frequently out of India for his business trip as well as for his outings. Outings means maybe personal. He left India from Delhi airport on 20th April 2024 and returned on 15th October 2024. Guys, this is a time which we have to consider is outside India. Clear? Sir, if nothing else is mentioned, what is the number of days he is in India? Simple. From 1st April to 20th April plus when did he come back? 15th October. 15th October to 31st March. And both days is considered to be in India. Date of arrival as well as date of departure. Oh, fine. This is during previous year. They have given something about past also. He has been in India for less than 700 days during the 7 years immediately preceding the previous year. This is an hint for additional conditions. But did he satisfy? No. Yes, sir. No. 730, no. There the number of days is 730. And here they are telling less than 700 days. Straight away you can tell the condition, additional condition under section 66 is not satisfied. Oh. Determine his residential status and his total income for assessment year 25-26 from the following information. First one, long-term capital gain on the sale of shares of Sharma India Limited, a listed Indian company, amounting to 1,12,000. Okay, an Indian company, guys. So is it an Indian income? Yes. 1,12,000. The sale proceeds were credited to his bank account in UK. Doesn't matter. Is it still taxable? Yes, in India. Dividend amounting to 40,000 gross received from RIL Limited, an Indian company again, Reliance Industries Limited. He had borrowed money from Mr. Abhay, a non-resident Indian, for the above mentioned investment on 2nd April 2023. Interest on borrowed money for previous year 24-25 amounted to 10,000. That's interesting calculation. Where is dividend taxable? Under that IFOs. Sir, against dividend, can we claim interest expenditure? Yes, but maximum 20%. 20% of your dividend income. What is the actual interest? 10,000. But 20% of your dividend income comes to how much? 8,000. So can you claim 10,000 or 8,000? Whichever is lower. 8,000. Remaining 32,000 is taxable under the head other sources. Hope you are getting it. Yes. Next. Interest on post office savings bank account amounting to 9,500. Guys, interesting adjustment. Post office savings bank account for which both exemption under section 1035 also, sorry, 1015. 1015 also is available as well as 80 TTA deduction also is available. Both are available. Clear? Yes. You need to take care of both. 9,500. Okay. Is following optional scheme. What should we do? First, determine the residential status. Apply section 6(1). As per section 6 subsection 1 of the Income Tax Act, an individual is said to be resident in India in any previous year if he satisfies any one of the following conditions. What are those? First, he has been in India during the previous year for a total period of 182 days or more. Second condition is he has been in India for at least 60 days in the previous year, that is 60 or more, and has been in India during 4 years immediately preceding the relevant previous year for a total period of 365 days or more. If both the conditions are not satisfied, then he is said to be a non-resident in India. Let us count. Mr. Akshay, an Indian citizen, has satisfied the first basic condition for being a resident since he was in India for 188 days. Sir, how did we count it? Guys, they have given when did he leave India and when he returned back. So he left India on 20th April and returned back on 15th October. Count it. So in April, how many days, sir? 20 days. Then coming back when he came back in October. So October, how many days? 31. 31 minus 14 is not in India. In October, 14 days. So 31 minus 14 you have to do. Okay, now? Yes. So 17 days in October. Then November, December, January, February, March. All other days is considered to be in India. So how much it comes to, sir? 188. Guys, by mistake, even if 1 day plus or minus if you do, you will lose marks. Sir, anyway, 187, 189 will not make any difference, no, sir. For answer, it will not make any difference, but for your marks, it will make difference. Clear? Because obviously, evaluator will feel that you don't know how to count the days also properly. At least like half marks they may deduct it, guys. So don't give chance for it. Don't give chance. So 188 days. Please be careful. The date of arrival as well as date of departure, both is considered to be in India. Okay. So is he a resident? Yes. Now we need to check whether he's ordinary or not ordinary. If he satisfies both the conditions given under section 6.6, ordinary. If not, not ordinary. What are the conditions, sir? He should be resident for at least 2 years out of last 10 years. And out of the last 7 years, he should be in India for 730 days or more. Guys, you need not check it. Here itself they told last 7 years, 700 days, less than 700 days. So straight away ruled out. Even if one condition is not satisfied, then he's a non-resident, right? Sorry, not ordinary resident, right? Yes. So since Mr. Akshay has been in India for less than 700 days during 7 years, immediately preceding the previous year, he would be resident but not ordinary resident for assessment year 25-26. Hope you understood. So as he has not satisfied about this, clear, don't worry about the first condition. Clear, because if he satisfies both, ordinary. If not, not ordinary. Then coming to income calculation. Computation of total income of Mr. Akshay. Long-term capital gain on the sale of shares of an Indian listed company is chargeable to tax in the hands of Mr. Akshay since it has accrued and arisen in India, even though the sale proceeds were credited to bank account in UK because it is an Indian income. Clear? 1,12,000. Then coming to IFOS, that is income from other sources. Dividend received from an Indian company taxable in the hands of Akshay as income from other sources since the income has accrued or arisen in India, 40,000. But against that, can he claim interest expenses? Yes. How much, sir? Actual interest or 20% of dividend income? 20% of dividend income comes to how much? 8,000. 8,000 or actual interest 10,000, whichever is lower. How much he can adjust? Only 8,000. So remaining 2,000, can he carry forward and all? No. So remaining is 32,000. Now look, this is interesting. Interest on post office savings bank account is taxable under that other sources, but exemption is available under section 1015. How much, sir? Maximum 3,500 for an individual account. If it is a joint account, 7,000. If nothing is mentioned, you will assume it to be individual account. How much, sir? 3,500. Remaining is what? 6,000. So add up all three, you will get gross total income. So gross total income is 1,50,000. And for this interest, again deduction is available under section 80 TTA. TTA, maximum how much? 10,000. But can you claim full 10,000 here? No. How much is included in gross total income calculation? Only 6,000. Only that much is available. Sir, what if this was 16,000? Then 10,000 would have been claimed here. Clear? Yes. So please be careful. Whatever is already included in gross total income or 10,000, whichever is lower. Whichever is lower. Maximum is 10,000. They didn't tell flat 10,000. Please be careful. Sometimes students believe that now flat 10,000, give it anta. No, no, no. If income included here is less than that, then you can claim only that much. Then you can claim only that much. Got it? Yes. Sure. Next. Question number 7. Okay, let me read the requirement first. Determine the gross total income of Mr. Mohan for assessment year 25-26 under normal provisions of the Act. Guys. Normal provisions means optional scheme. Okay. Mr. Rohan, an employee of ABC Limited, is posted at Mumbai. He was appointed on 1st March 2024, last financial year, on the scale of 60,000, 62,000 and 80,000. Guys, this we call it a pay scale. When he was appointed, guys, listen, this is interesting. On 1st March, right? 24. When will he complete 1 year? On 28th February 25. Correct? Yes. So for this year, he will get a salary of 60,000. Once he complete 1 year, from next year, that is from 1st March 25 to 28th February 26. What will be his monthly salary? 62,000. Because he will get an hike or increment of 2,000. Till when, sir? Till his salary reaches 80,000. Once he complete every year, he will be getting a monthly increment of 2,000. We call this as pay scale. Okay. Now we should be concerned about during our previous year, how much did he receive? So for our previous year, when is it, guys? From 1st April 24 to 31st March 25. So if I check, 11 months will fall here and 1 month will fall here. 11 months will fall in the top category and 1 month in the below category. So for 11 months, he received 60,000. For 1 month, he received 62,000. That is only for March. Even after that, he will continue to receive 62,000. But I am concerned about only my previous year. Because any calculation we do is for our previous. Hope you guys are getting it. Sir, why didn't you consider this March, sir? Guys, this March, whatever he has earned would have been taxed already in the last. Clear? I should take only from 1st April of my previous year. Hope you are getting it. Yes, sir. So what would be his basic payments? 60,000 into 11 plus 62,000 into 1 month. Hope you are getting it, which is equal to, I will just show you. You can see, which is equal to 7,22,000. 7,22,000. Whenever they are given like this, guys, students get confused. Please be careful. You consider what is the income earned during the previous year. For us, the previous year is 24-25. Okay, sir. Sure. Let us go back. And whatever calculation will be given here is for basic pay, not entire salary. If anything extra is given by the employer, then we need to keep on adding it. Yes. Details of his other income for the previous year 24-25 are as follows. So the question is mainly targeted on like salary paid. Dearness allowances 40% of basic salary, whereas 60% forms part of pay for retirement benefit. Okay, 40% is DA, but in that how much is forming part of retirement benefit? 60%. This is relevant only to claim exemptions cash. Yeah, or maybe for deductions. That's all. Telephone allowance 500 rupees per month. Okay, fully taxable. Both Mr. Rohan and company contribute 15% of basic salary to recognized provident fund. Interest accrued in this fund is 12% per annum, but exemption is only 9.5%. Remaining is taxable. Amounted to 25,800. The company has provided him with a rent-free accommodation, unfurnished accommodation. Okay, no furniture. In Mumbai, owned by the company. Guys, whenever rent-free accommodation is provided, who is the owner? First you have to check. Who is the owner? The employer. When the employer is the owner, population of the city will matter. Clear? Which city? Mumbai. Whenever it is the main city, consider population is more than 40 lakh. When population is more than 40 lakh, what is the purpose? 10% of salary. 10% of salary. Correct. Mumbai they have told. They didn't mention the population and all. Normally they may not give it. Whenever they have given any main cities like Chennai, Hyderabad, Bangalore, Kolkata, like that, Mumbai, please consider population is more than 40. So it is 10% of salary, guys. Okay. The salary of 2,500 per month of domestic servant is reimbursed by the company. We need to add it as per visit. Rowan has used his own car of 1.8 liter engine, more than 1.6. More than 1.6. For both official and personal, they confusion point. They want to ask that question. Okay, because if it is only for personal, only for official, easy, sir. But if it is partly, that is where students get confused and they want to target that area. Clear? Who owns the car, guys? Employee. Car is used for what purpose? Both the purpose. Then the running and maintenance expenses of 50,000 are borne by company. That is employed by employers. Oh, let us see it. Profession tax paid 2,500, of which 1,500 was paid by employer. Totally paid payment is 2,500. But how much employer paid? 1,500. Whatever employer paid, first include it in the gross salary. Then give deduction. How much deduction? Full amount. Yes. During the year 23-24, that is last year, Mr. Rohan gifted a sum of 6 lakh to Mrs. Rohan, that is wife. She starts, sir, because Mrs. Some people will not observe. Mohan gifted to Mohan. Or Rohan gifted to Rohan. Chalo. She started a business by introducing such amount as her capital. On 1st April 2024, our total investment in business was 10 lakh. Guys, whenever we are considering clubbing for business income, we need to consider the capital on the first day of the previous year. What is the total capital? 10 lakh. In that, how much is gifted by husband? 6 lakh. So proportionate you have to take 6 by 10. 6 by 10. During the previous year 24-25, that is our previous year, she has suffered loss. She has suffered a loss of 1,20,000 from such business. Now see, if she has earned a profit, will it be clubbed with husband? Yes. What if she has suffered a loss? It is as if husband loss. Wife husband ಒಂದೇ ಮನೇಲಿ ಅಲ್ವಾ, ಜಾಯಿಂಟ್ ಅಕೌಂಟ್ ಅಲ್ವಾ? Yes. ಚಲೋ. So in that case, how much loss can be adjusted by Rohan is 1,20,000 into 6 by 10. Into 6 by 10. He can adjust it as if it is his loss. Okay, and please be careful, nature of loss will not change. It will be business loss now. Clear? Yes. Determine gross total income. Thus, yeah, it is mainly on the salary income, but plus few more items are there. But main target is salary area. Income from salary, guys. Basic salary 60,000 into 11. That is from April to February only. Whereas for March it is 62,000. 2,000 extra I will get. Okay. Dearness allowance 40% of 7,22,000. Then telephone allowance 500 into 12. Allowance fully taxable. Then employer contribution to recognized provident fund 15% of basic pay only. Please be careful, 15% of basic pay. So 7,22,000 into 15%, you will get this. But exemption is how much? 12% of salary. Salary here includes, guys, salary here includes basic pay plus DA forming part of retirement benefits plus commission expressed as a fixed percentage of turnover. Commission is not there. We will rule it out. Other two, is it there? Yes. Should we take DA here? Yes. The employer contribution is 15% of basic pay, but exemption is available for DA also, which is forming part of retirement benefit. Please be careful. You might miss out that. So exemption under section 10-12. Easy to remember. 12% of salary is exempt under which section? 10-12. Okay. How much? 12% of 8,95,280. Sir, how did you get this figure? Simple. Take full basic pay and 60% of DA. Why only 60%? Which is forming part of retirement benefits. Please be careful, guys. DA is 40% of basic pay. Adralli 60% we have to take. Don't straight away go apply 60% on basic pay. You will be wrong. Whatever basic pay, sorry, DA you already got into 60%, which is forming part of retirement benefit. You can see I have shown here. Okay, now into 12% of. Whatever you get here, you will get 8,95,280 into 12%, which is exempt. Remaining is tax. Remaining is taxable. Okay. Coming to interest. Actual interest is how much? 12%. But how much is exempt? 9.5%. Not of salary. 9.5% interest rate. So, how much is exempt? 9.5%. How do we get it, sir? Simple. 25,800 is for 12%. How much for 9.5%? Remaining is tax. Next, value of rent-free accommodation. Guys, when accommodation is provided in Mumbai, population is more than 40 lakh. I have already explained it. What is the value of perquisite? 10%. Sorry, 10%. And it is unfurnished. Don't worry about furniture. Yes, sir. 10% of what and all? Basic pay, DA forming part of retirement benefits, and all taxable allowances we have to take. All taxable allowance, but don't take perquisite. Don't take perquisite. What and all has to come? Basic pay, DA forming part of retirement benefit plus allowance. All taxable allowance has to come, but here only one allowance is. Got it? 10% of it. 10% of it. Hope you understood why 10%. Mumbai, population more than 40 lakh. Oh. Reimbursement of salary of domestic servant, 2,500 into 12, 30,000. You might ask me, sir, why didn't you consider this year? Guys, even this is a perquisite. Okay, I'm going in the order you can observe. Don't mismatch. See, I have taken only telephone allowance. Why, sir? Because that is an allowance. Sir, what about this, sir? This is also not an allowance. Okay, now please be careful. Even this you should not take for perquisite valuations. Even perquisites you should not consider. Clear? Yes. Please be careful. Next. So reimbursement of salary is taxable. Then perquisite of motor car, guys. Let me just show this. Perquisite of motor car. Just a minute. Yeah. This is the table which I have made for value of motor car. First, who is the owner? The employees. Car is used for what purpose? Partly office, partly personal. In that case, what is the value of perquisite? You should take actual expenditure and deduct. And deduct. How much, sir? If CC of the car is within 1.6, 1,800. If it is more than 1.6, then you have to reduce 2,400. So take actual expenditure and reduce 2,400 here. Why 2,400? Because the CC of the car is more than 1.6. Got it? Yes, sir. Sure. So actual expenditure incurred by employer is 50,000. From that, we need to reduce 2,400. Sir, why are you reducing? We consider this for official purpose. Remaining is considered to be for personal purpose, which is tax. Clear? Yes. So 2,400 into 12, 28,800. Oh. Profession tax paid by employer. Even this is taxable as perquisite. 1,500. We call this as obligation of employee met by employee. Met by employer. So you will get a gross salary of 11,84,594. Deductions under section 16. Standard deduction always available. Guys, question will not mention about this, but still you have to give for it 50,000. Then profession tax paid 2,500. Okay, because both put together you have to give deduction. Paid by employee as well as employer. But whatever is paid by employer only you need to add it here before gross salary. Okay, sir. So you'll get a total deduction 50 to 500. Taxable salary is how much? 11,32,094. Now, husband has gifted money to wife and the wife has gifted loss to husband. So, can he claim it? Yes. How much? Proportionately. How much, sir? So, 1,20,000 is the loss into 6 by 10. Into 6 by 10, which comes to 72,000. So, it is a current year business loss. He can adjust it against any head except salary. But unfortunately, he has only salary. So can he adjust it? No. He can carry forward for next 8 years. He can carry forward for next 8 years. So that is why I have not written anything here. Okay. You can also separately give a note for it. Instead of showing here, sir, can I straight away give only note? Yes, because it will not affect income calculation. Yeah. So what is this gross total income? It is 11,32,094. Easy? Yes. Sure. Eighth one. Mr. Mayank, okay, before reading, let me just read if the question is lengthy better. Okay, let us just read the requirement first. Compute, I am reading this line. Compute the gross total income of Mr. Mayank for assessment year 25-26 and the amount of loss, if any, that can be carried forward if he wants to continue with the provisions under section 115 PAC. Okay, if you want to continue under the provisions of section 115 BAC means which scheme you want to follow? Default scheme. Okay, sir. Fine. Let me read the information now. Mr. Mayank, a resident individual, maybe somewhere it may play a role. Resident. And if by chance age is not given, what do you assume? Less than 60. Less than 60. Furnish the following information in respect of income earned and losses incurred by him for financial year 24-25. What are this? Income from salary already computed. Will you give standard deduction? No, no, no. Already taken care. Already taken care. 27,40,000. Long-term capital loss on sale of shares of Reliance Limited. STT has been paid both at the time of acquisition and sale. 1,25,000. So that means this is a loss under which section? 112A. Clear? But it is a loss. I can adjust it. Income from let out of property in Kanpur. 5,50,000. Loss from let out property in Delhi. 375. Interest on self-occupied property in Mumbai. 150. Allowed? Allowed? Illa. Why? He is following default scheme. Under default scheme, interest on self-occupied property is blocked. Clear? They have given you just to confuse. You cannot claim it. Clear? Yes. Net winnings from online games. Net of TDS 35,000. Guys, net of TDS is given. But while including the income under the head other sources, how much should you include? Gross. How do you calculate gross now? 35,000 is net figure. What is the rate of TDS? 30%. So 100 minus 30%, 70%. So you will get 50,000. You will get 50,000. So what gross figure should you include? 50,000. Hope you understand. You should know TDS rate. If not, you cannot do this kind of questions. Clear? Yes. Next. Profit and gains from manufacturing business after deducting normal depreciation 2 lakh and additional depreciation 50,000. 36 lakh 86,000. One more twist is there. What is it, sir? Sir, this is not allowed. Under default regime, additional depreciation is not allowed. So what should I do now? Add it back. because it's already deducted. They are told after deducting. Normal depreciation is allowed, but additional is not allowed. So what will you do? Add it back. Hope you are getting it. Yes. So that is why I tell first read the last line and then come to the question is all this you can connect. Correct. But after reading all the story, if you go and read the requirement, by then, oh yo, whatever I read, you would have already connected to the answer. What to do? But now again you have to reframe. Clear? Yes. Sure. The other details of losses and unobserved depreciation pertaining to assessment year 24-25 are as follows. Business loss from manufacturing business 5,35,000. Guys, if it is a brought forward business loss, it can be adjusted only within the same head. Unobserved normal depreciation, you can adjust it against any head except salary. And please be careful against casual income and undisclosed income. You cannot set up any loss. You cannot set up any loss, guys. Loss from activity of owning and maintaining resources 1,50,000. Guys, this loss can be adjusted only again same income. And assessee has not earned any income. What should you do? Okay. However, you brought forward now same way you carry. Understood. And please be careful. This can be maximum carry forward for 4 years. Already 1 year is over. Remaining you can carry forward it to 3 years. So should I mention the number of remaining years and all? Yes, if you can calculate it easily, you can mention. Like it can be carried forward for remaining 3 years and all. If not, just mention it can be carried forward. That's all. Yeah, because to calculate that and all, don't waste too much time. Next. Loss from let out property in delay. Guys, look at the beauty. This is the brought forward loss. When assessee is following default scheme, can he carry forward the house property loss? No. Only one option he has for house property losses, he can set off within the same head in the same year. Can he adjust it against other heads? No. Can he carry forward? No. So no use of this. No use of this. Mr. Mayan filed his return of income for assessment year 24-25 last year on 28th July 2024 and opted for section 115 BAC. This is actually 25. Okay, so he filed it within the due date. Yes, that means guys they are trying to connect to the returns provisions. If returns is not filed within the due date, you cannot carry forward the loss except house property loss and unobserved depreciation. Correct? So here what are they trying to give an hint? They are trying to give an hint that return is filed within the due date. In that case, can it be carried forward and adjusted? Yes. Sir, what if return is not filed within the due date? Then you cannot carry forward the loss. Agree. Exceptions are house property loss and unobserved depreciation. Got it? So we are supposed to calculate gross total income of Mr. Mayan under default regime. Sure. Let us see. First, income from salary is already computed. You need not do anything. Please be careful. Again, don't give standard deduction at all. Everything is taken care because they have mentioned computed. Yes. Income from house property. Guys, this is one of the important adjustments. Income from let out property in Kanpur 5,50,000 is there. Set off of loss of let out property in Delhi, current year house property loss. Can we adjust it within the same head? Yes, that is the maximum thing you can do for house property loss. 371. Then interest on loan for self-occupied property is blocked under default regime, so you cannot claim it. If you can claim, you will have loss, but you cannot claim at all. Okay. Then brought forward loss. Can you adjust it? No. First of all, you cannot carry forward only. Now you have brought it. Can you adjust it? No, you cannot. Because you are under the default scheme. Okay. So what is the net house property income? 1,75,000. Sir, this can we carry forward? No, you cannot carry forward. First of all, you should have not brought forward only, but you have brought forward. Now, can I use it? No. Can I carry forward? No. Forget about it. Forget about it. Then PGTP guys. Profit from manufacturing business 36,86,000. And that was after claiming additional depreciation. Under default regime, it is blocked. So please add it back. Please add it back. Only additional. Only additional. Okay, sir. Brought forward business cost. Can we adjust it? Last year's? Yes. 5,35,000. We can adjust it. Then unobserved normal depreciation is there now. Which one from here? Can we adjust it, sir? Yes. We can adjust it. So remaining is 29,91,000. Clear? Yes. See, if you ask me, sir, can I adjust this even against the house property income? Yes, actually. Okay, but first adjust within the same way. If not possible, go and adjust it against other rates. But if you ask me, sir, can I adjust this Against salary income, no, you cannot. Unobserved depreciation can be adjusted against any income except salary. Okay. And can we carry forward it for any number of years? Yes. So there is a long-term loss under section 112A, guys. How much, sir? 1,25,000. Do we have any income? No. Long-term loss can be adjusted only against long-term gain. We don't have any long-term gain. So what will I do? Carry forward it to next 8 years. Next 8 years. So that is why I have just mentioned in the inner column, not in the outer column. If you show in the outer column, it is as if you are adjusting. Don't do that. Clear? Or else to be more safer, write nil here and give an explanation here. Or else give a nil separate. Clear? Yes. Then IFOX, income from other source. And are you observing while calculating total income, we will go in the order of head only. Sir, first I will write other sources, then salary, then PGBP. No, no, no. Please don't interchange. Please go in the same order. So net winnings is how much, sir? 35,000 net they have given divided by 70%. Sir, how did we get 70%? 100 minus 30% TDS. 30% TDS. Oh. So we get a gross total income of 59 lakh 56,000. If they have just asked you to calculate income, stop it here. But they have also asked you how much loss will be carried forward. So, brought forward loss of activity of owning and maintaining resources. I could adjust it only within the same head. I didn't have any, sorry, same income, not same head, same income. I didn't have any such income. So, what will I do? I will carry forward. Then long-term loss can be adjusted only against long-term gain. I didn't have it. Carry forward it to next 8 years. Got it? Sir, what about the house property loss? I told you, forget about. Forget about. That's all, guys. Next, question number 9. Question number 9. Mr. Ramesh, a resident individual, again, is an authorized wholesale Okay, first let me read the requirement. Then I will come to this. You are required to compute the total income and tax payable by Mr. Ramesh for assessment year 25-26 under the regular provisions of that. Regular means what? Optional scheme. Okay, sir. Mr. Ramesh, resident individual, is an authorized wholesale distributor of fertilizers and other agricultural products. An analysis of his trading and profit and loss account for the year 31st March 2025 revealed the following information. Net profit 75,43,000, which we will take it as a base. We'll take it as a base. The following incomes were credited in P&L account. Guys, were credited means what? Because of it, my profit has gone up. If it is taxable under the 8 PGBP, don't do anything. No, sir, it is not taxable under the 8 PGBP. Some other head, what should you do? Deduct. Because your profit has already gone up. Remove it. So what are those? Rent received, IFHP, income from house property, income tax refund. Only interest is taxable where other sources. Then dividend from Indian company, 2,50,000 gross. Gross is given. So you need to remove all this. You need to deduct all this thing. Okay. Next. Rates and taxes debited to profit and loss account include 1,000 rupees paid towards late filing of his IT return for assessment year 24-25, that is last year, under section 234F. 234F talks about late fee. Clear? Is late fee allowed? No. It is penal in nature. It is penal in nature. So as per section 37, disallowed. What should we do with this? It is already debited, so you need to add it. Salary debited to profit and loss account include 35,000 paid on a single day by way of cash to his account rate. 40A3. 40A3 get attracted. More than 10,000 paid to a single person in a single day in cash. Disallowed. How much, sir? Only 25,000 or full 35? Full 35 is disallowed. Next. Interest of rupees 1,20,000 paid on loan of rupees 10 lakh taken from NBFC, who is the lender. Out of the loan, amount of 2 lakh was used for personal purpose. Guys, interesting adjustment. 2 lakh was used for personal purpose. Disallowed on that 2 lakh, whatever interest is paid, disallowed. And balance was used for business purpose. No TDS was deducted while paying interest. Interest of 1,20,000 is debited to profit and loss account. Guys, there are two disallowances here. First disallow how much? 1,20,000 into how much is for personal purpose? 2 lakh. So 2 into 10 disallowed. As per which section? 37. and remaining interest also on which TDS was supposed to be deducted but not deducted. How much will be disallowed? 30%. 30%. Hope you got it. Yes, I will explain it when solving also. Next, municipal tax of 10,000 paid for building was debited to profit and loss account. What should we do? Add it back. You will claim it under the head house property. We also have a rental income. If question is silent, please take this only as GAV, gross annual value. Additional information. Closing stock was undervalued by 40,000. Guys, closing stock would be debited or credited? Credited. So if it is undervalued, your profit has come down or increased? Come down. Correct. So what should you do now? Add it. Analyze like this. See, nothing to mug up what to add, what to deduct. Simple. Closing stock will be credited. If it is undervalued, so automatically your profit has gone down. So what should you do now? Add it to your profit. Okay. Income tax refund includes 2,000 towards interest. Look at the beauty. When you are removing it, you remove full 15,000 while computing PGBP income. But under the head IFOS, how much will you include? Only 2,000. Not entire 15, only 2,000. Remaining 13,000 is what? What I paid extra, I got it back. Is it my income? No. Principal part is not an income. An amount of 45,000 was paid by check during the year towards health insurance policy covering himself, his spouse, and his children. What is the age? Illi age matter. Okay, not given. Less than 60. Less than 60. How much he has paid? 45,000. Restricted to 25,000. Deduction under section 80D. Correct. Huh? Maximum how much? 25,000. If assessee or any person is senior citizen, then maximum 50. Maximum 50. Advance tax paid during the year 15 lakh. From your final tax liability, you will reduce. Not in income, from your final tax liability. Half of the building is used for business purpose and remaining half was let out to Mr. Anshul for residential purpose. Means there is one building, half is let out, half is used for business. Half whatever is used for business, nothing is taxable. Clear? Yes. Whereas when it is let out, where is it taxable? They are earning rent. Guys, this is from let out portion or whatever is used for business. Let out, obviously. Correct? Yes. So this is half of the house. Look at the beauty. Municipal tax paid, where are they given? For a building. Building includes only let out portion or both the house? Both. So how much is allowed? Only 1/2. All these are like hidden adjustments. Correct? Because by mistake you may take full 10,000. No, only half of it. Only half of it. Close all the windows, no? Yes. Where were we? Last one. Is also sold his vacant land on 10th June 2024. Guys, whenever the question is on capital gains, please observe the date. This is before the change. Before the change. That is before 23rd July. Oh. For 10 lakhs. The stamp duty value of the land at the time of transfer was 14 lakh. What is the sale value to compute capital gains? 14 or 10 lakh? 14 lakhs. Correct. Stamp duty value is more than 110% of your sale value. What is sale value? 10 lakh. Don't straight away compare that. Take 110% of it. How much it comes to? 11 lakh. Is 14 lakh more than 11 lakh? Yes. What is the full value of sale consideration? 14 lakh. To compute capital gains. Yes. And one more thing. Guys, this is from seller point of view. This is from seller point of view. Which section did we apply? 50C. 50C. Now listen, from buyer point of view also, 56 to 10 is applicable. 56 to 10 is applicable. He purchased the land for 10 lakh whose value is 14 lakh. What is inadequate consideration for him? 4 lakh. 4 lakh is taxable for him. Okay, but for this question they have not asked, but I'm just telling you. If at all if they ask in the exam, from buyer point of view also, for him it is taxable. Where? Inadequate consideration 4 lakh under the head other sources. As per section 56 to 10. Got it? Yes. The FMV and stamp duty value of the land as on 1st April 2001 was 4 lakh and 3 lakh respectively. This is for fast calculation. This land was acquired by him on 5th August 1996 before 1st April 2001, which is a base date for capital gains. Clear? Yes, sir. For how much? 1.8 lakh. He had incurred a registration expenses of 10,000. Guys, what is the total cost? 180 plus 10, 190. 190. at that time. The cost inflation index for 24-25, that is our previous year, 363. Whereas for base year 2001 to 100. Guys, how to calculate the cost in this case? It is a long-term asset purchase. Okay, fine, fine. If long-term asset is purchased before 1st April 2001, which is a base date, then cost calculation will vary. Sir, as it is a land, we need to even bring FMV as well as stamp duty both into picture. So what will you take? Listen. Stamp duty value and fair market value. Both you have to take. On what day? On 1st April 2001. Take whichever is lower. Take whichever is lower. Compare that with actual cost. Take whichever is higher. On that, apply indexation. On that, apply indexation. Guys, only for land and building, we need to take both FMV as well as stamp duty value. If it is any other asset, only FMV. Only FMV. That is only when asset is purchased before 1st April 2001. Hope you are getting it. Yes. Last one. Mr. Ramesh turnover for previous year 23-24 was 3 crores. Guys, this is not relevant for our calculation, but they are just trying to give an hint that for Ramesh, last year audit was applicable. Last year audit was applicable. Last year if audit was applicable, in the current year, who is he? Individual, huh? Hello, he's an individual. Is he covered as payer? Yes, for TDS purpose I am talking about. Is he covered as payer? Yes. On this interest, was he supposed to deduct TDS? Yes, but he has not did. So will it be disallowed for him? Yes. And NBFC assume it is a resident. So under section 40A 1A, TDS would be deducted. How much, sir? 30%. But before disallowing this, first you have to disallow personal expenses. How much is personal expenses? 1,20,000 into 2 by 10. Correct? Because 2 lakh of the loan amount is used for personal purpose. Hope you are understanding. So please don't include this in any of your calculation. This is just a hint for you to tell that audit was applicable for you in the last year. Clear? Yes. Chalo, we will do. First, income from house property, rent received itself, we are taking it as GAV because municipal value, fair rent, standard rent and all is not given. So 5,40,000. And municipal tax paid by Ramesh, how much? Only half you have to take because 10,000 is paid for full building. Only half is left out. Okay, 5,000. Please be careful. This is like a star for you. Then 5,35,000, you will get the net annual value. From that standard deduction you reduce, which is 30%. Sir, what about interest? When question is silent about interest on housing loan, you don't assume any figure. Ignore it. Oh. So, how much is the income from house property? 3,74,500. Next, coming to PGBP. Net profit as per P&L account, they have already given. We are taking it as a base. Then they have also told what is debited, what is credited and all. Wherever required, make an adjustment. Okay. First one, add. Expenses or payments debited to profit and loss account but not allowed. Guys, see, some students might not give an heading like this. They will keep on adding and deducting. Don't do that. Okay, give an heading. What to be added, what to be deducted. You can observe, I have given the heading. Correct, you can see here. Correct. See, if there is only one item, you can straight away write like this. But when there are multiple items, please give the heading for addition and deduction and then show it under that. Oh, one by. Fee for late filing of income tax return. Guys, as it is penal in nature, it is disallowed as per section 37. Next, salary paid to an accountant in cash, more than 10,000, entire 35,000 is disallowed. Entire 35,000 is disallowed as per section 40A3. Easy to remember. A3, cash. So, C is the third alphabet, A3. Okay, after C, A will come, na? Oh, A3. Chalo. Interest paid to NBFC on loan which is used for personal purpose. Guys, personal expenditure are disallowed as per which section? 37. So, how much is that? 1,20,000 into 2 lakh by 10 lakh. Total loan amount is 10 lakh. In that, how much is used for personal purpose? 2 lakh. So, how much interest is disallowed? 24,000. One more question. What is the remaining interest? 120 minus 24. How much is there? 96,000. On that, TDS was supposed to be deducted? Yes, but not deducted. So 30% of that will be disallowed as per section 48 1 year. Clear? Some student may also tell, sir, why not 120 full year? 120 into 30% you will disallow year? No. Guys, you will apply 48 1 year first or 37 first? 37 first. So 37 already 24,000 is disallowed. Remaining only will go and touch 48 1 year. Correct. On which TDS was supposed to be deducted but not deducted. So you will disallow 30% of 96,000 and not 1,20,000. Hope you got it. Clear? Yes. Because anyway, already 24 is fully disallowed. Why to disallow again 30%? Correct. Yes. Chalo. And see, one more example I will give you. Cash payment more than 10,000 is disallowed. Correct. Yes. But section 36(1) will tell. I will just show you. 1 second. 1 second. 1 second. This is just for better clarity, guys. That's all. System. Look here. If you are paying health insurance premium in the name of employees, as per section 36 subsection 1, they are telling you cannot pay it in cash. You cannot pay it in cash. Assume, guys, employer paid 5,000 health insurance premium in the name of employee in cash. Is it allowed or disallowed? Is it allowed or disallowed? Disallowed. As per which section? 36(1). Not 48(3), 36(1). Now, can I tell? No, 48(3) told 10,000. So it is allowed. No. In 36 only, they are clearly telling. Now, before you go to 40, check 36. It is telling you cannot pay in cash. So even if 1 rupee is paid in cash, disallowed. Clear? Yes. Then what will go to 48(3)? Any other expenses where they have not mentioned here, you cannot pay in cash. So for those expenses, go and check 48. If any expenses is blocked here itself, will we go and check 40 for the sections? Clear? Yes. So whichever expenses is otherwise allowed, we will check section 40. If it is restricted there or disallowed there, then we will block it. Then we will block it, guys. Oh, sure. Then municipal tax paid for let out portion, 5,000, we are disallowing. Sir, what about another 5,000? Business building only, na? Allowed? Yes. Entire 10,000 don't disallow. Only 5,000 you disallow. Because 5,000 you claimed it here, no? Got it? Yes. Because another half of the building is used for business purpose. For that, whatever municipal tax is paid, is it allowed? Yes. But make sure that it is paid. They are clearly told it is paid. Because 43B is applicable for taxes other than income tax. Okay? Yes. Then undervaluation of closing stock, add it. Then the incomes, whatever is credited but not taxable under the head PGBP, remove them first. We need to deduct. What do we get? Income from business, 68,71,800. Then capital gains. Guys, asset is an immovable property, that is land. It is held for more than 24 months. So short term or long term? Long term. So we need to compute long term capital gain. How much is the sale value? 14 lakh. Sir, 14 lakh. Yes, I already explained. Na? Stamp duty value we need to take. Why, sir? Because stamp duty value, I have given a note also. Let us see. IR of stamp duty value of 14 lakh and actual consideration 10 lakh. Okay, when comparing, we should not straight away compare 10 lakh. We need to take 110% of 10 lakh, which comes to 11 lakh. Is 14 lakh more than 11 lakh? Yes. What is the full value of sale consideration to compute capital gains income? 14 lakh. Yes, sir. Even for the interest part, I have given a note. You can just have a look into it. Since Mr. Ramesh turnover for the immediately preceding previous year, 23-24, that is last year, is more than 1 crore. Is audit applicable for him? Yes. So is he covered as payer now? Yes. Was he supposed to deduct TDS? Yes. But did he deduct? No. So will TDS non-deduction will disallow the expenditure? Yes. As NBFC is a resident, we will disallow 30% under section 48(1)(a). Okay. So full value of sale consideration 14 lakh we are taking. Important. Next, as it is a long-term capital asset which is sold before 23rd July, is indexation available? Yes. No lower, no higher, no comparison. Okay. If it is after 23rd July, few things are there. While computing income, you have to take capital gains without indexation. Whereas while computing tax, you have to compare both with indexation, without indexation, apply old rate, new rate, and whichever is lower, you will take it. Correct. But here, no such confusion. No such confusion, yes. Because the transfer has happened before 23rd July. First, let us see the actual cost calculation. Take actual cost, which is 180 plus 0.10, which is that figure. Okay, 1.9. What is the 10,000, sir? They are told something is paid for registration, I guess. Registration 10,000. Paid at the time of purchase. Should it be included in the cost of purchase? Yes. Okay. Then fair market value and stamp duty value we have to compare. 4 lakh or 3 lakh, whichever is lower, we have to take 3 lakh. 3 lakh has to be compared with 1.9 lakh. Whichever is higher, we have to take 3. Okay, hope you understood. You better follow the steps which I told you. Like this is like how they are given in the suggested answers and all. But I suggest like this: take stamp duty value and the fair market value as on 1st April. Take whichever is lower. Compare that with what? Actual cost. Take whichever is higher. That's all. On that, apply indexation. So on 3 lakh, can we apply indexation? Yes. Is indexation available? Yes. So 3 lakh into cost inflation index for the year of transfer, 363. Divided by, normally we have to take cost inflation index for the year of purchase. But if purchase is before 1st April 2001, take it for base year. Okay. 3,11,000 is the long-term capital gain. Taxable at what rate? 20%. Where is it covered, sir? Section 112. Land, no? 112. Okay, 20% is the rate. Next, income from other sources. Interest on income tax refund, 2,000. Dividend from Indian companies, 2,50,000. So 252. Gross total income comes to 78,09,300, guys. Then deduction, ATD deduction for health insurance premium paid for self, spouse, and children. Everything comes under one category only. Parents rate category. So what is the maximum deduction? 25. Even though it is paid more than 25, it is restricted to 25 because the assessee or any of his family members are less than 60. Everyone are less than 60. None of them are senior. When nothing is given about the age, please consider less than 60. Okay. So the total income is 77,84,300. That's all. They have also asked tax. Have they asked tax also? Just a minute. Yeah, tax payable also. Let us do it. Which scheme? Optional scheme. Yes. First, check whether total income includes any special income. Yes, sir. Special income is there. Under which section? 112. What is the tax rate? 20%. Flat. Flat. Please be careful. Date of transfer is before 23rd July. Rate matters there also. So tax on 3,11,000 under section 112 at what rate, sir? 20%, which comes to 62,200. Then tax on the balance income. Balance income is how much? Total income minus special income you do, which is nothing but normal income. Tax of the slab rates up to 2,50,000 nil. 2,50,000 to 5 lakh 5%, which comes to 12,500. 5 lakh to 10 lakh 20%, which comes to 1 lakh. Then more than 10 lakh, it is 30%. More than 10 lakh, how much, sir? 4,73,300 minus 10. You will get 64,73,300 into 30%. Into 30%. So we will get a gross tax of, add up both, gross tax of 21,25,690. Total income is more than 50 lakh. Is surcharge applicable? Yes, more than 50 up to 1 crore. How much? 10%. So, and here no need to differentiate. Sir, for this separate rate, for this separate rate, no. Clear? Only when surcharge rate crosses 15%, you need to do that. Clear? Yes. Here it is 10%, no problem. So on entire gross tax liability, 10%. Okay. Then you add up both. Gross tax plus surcharge. On that 4% health and education cess. 4% health and education cess. Okay. So final tax liability comes to 24,31,789. And in the question they have told advance tax paid. How much, sir? 15 lakh. Reduce it. So after this, what is the tax payable? 9,31,789, which we are rounding up to nearest to 10 rupees as per section 288B. But one more important thing which they have missed in the suggested answers, guys. Clear? This is what they have given in suggested answer. But in the question, you can observe they have mentioned the figure as gross here. That means TDS would have been deducted on this also at 10%, right? Yes. Can we claim a credit of that? Yes. Which comes to 25,000. Okay, in my opinion, you need to reduce that also. Clear? When you are reducing advance tax, you have to reduce another 25 also here, which is TDS under section 194, TDS on dividend. Clear? I have given note here. I suggest you, whenever TDS int is given, now gross they have mentioned, that means TDS would have been given. Clear? Please consider. Clear? If you are not considering an answer, at least give a note like this. Don't completely ignore it. Clear? I've given a note, you can see. TDS deducted on dividend income under section 194 can also be reduced from net to tax liability. That is, once you reduce 15 na year, even 25 has to be reduced. After that, whatever you get, you round up. You round up. Got it? Yes. Sure. Let us go to question number 10. Question number 10. Compute current total income under default tax regime under section 115 BAC for assessment year 25-26. Assuming his wife does not earn any income. Why they gave that? Maybe somewhere it is helpful. We will see. Wife is not earning any income itself. Okay. Husband is there. No. Anta. Chal. Current, a resident aged 50 years. Age will not matter for our answer, but residential status somewhere might be helpful. We will see. Furnishes the following information for the year ended 31st March 2025. Salary, gross 275. Should we take care of standard deduction? Yes. How much standard deduction under default regime? 17. Okay. Income from let out property 285. See, word they have mentioned income, but it is actually loss. In bracket it is given na loss. Interest on loan paid for self-occupied property 120. Sorry, current. You cannot claim this. Why? You are following default. You are following default regime. Income from sale of rubber products from rubber plants. Guys, this is interesting. Income from sale of rubber products from rubber plants. That means 2 lakh is the income. Can I consider that? Current is growing as well as manufacturing? Yes. So when it's growing as well as manufacturing, we have to segregate by applying the rules. 2 lakh is partially agriculture income, partially business income. Hope you are getting it. Yes. What is the ratio of segregation? 65-35. 65-35. Business income. Business income will not include this part. Okay. They have given it separately. Retail business 120. Income. Business income. Wholesale business 1 lakh. Guys, wholesale business means, is it a special business? No. Can that loss be adjusted against any business income? Yes. Can we adjust it against other rates? Yes, except salary. And it is current year loss, no? You can adjust it. Brought forward business loss. It can adjust it only be within the same head. 135 of last year it is. Dividend received from ABC Limited, an Indian company carrying on agriculture operation, 13,500. What is company doing doesn't matter. Some students think that even this is exempt. Please don't exempt it. If you are receiving dividend income, it is always taxable under other sources. What business the company is doing doesn't matter here. Long-term capital gain from the sale of listed equity shares, 2 lakh. STT paid on sale and purchase of shares. So where is it covered, guys? People, where is it covered? 112 EA. Okay, 2 lakh. Up to 1 lakh 25, not taxable. But include entire 2 lakh under the head capital gains. But while calculating tax, you reduce 120. Short-term capital gain on the sale of shares, 1,10,000. Short-term capital loss it is actually 110. Can we adjust short-term loss against long-term gain? Yes, you can adjust it. Lottery winnings gross 45 IFOS. Contribution to Provident Fund and NSC. NSC means National Savings Certificate. Deduction available under section ATC. Income of minor son Raju from a special talent. Is it club? No, because it is because of the efforts of the child. Will it be club? No clubbing. But next you see, interest from bank received by Raju on deposit made out of his special talent. On deposit is earning interest. Is it club? Yes. Because for this he is not making any effort. See from which source he got the money doesn't matter. Now on this interest, is he putting any efforts? No. So will it be club? Yes. 64 1 year. It will be clubbed with whom? Father. They told mother doesn't have any income now. Actually, whenever the income of minor child is clubbed, with whom it will be clubbed? Father or mother, whoever is having higher income. But here they gave a it is helpful for this. Mother is not having any income. So income of a minor child, that is only 10,000, not 150, only 10,000. Will be clubbed with whom? Father. That is current now. Current. But whenever clubbing get attracted for minor child, exemption is available under section 1032. Maximum how much? Income club or 1500, whichever is lower. But under default regime, not available. Not available. Is it clear? See, some student, if they remember it, they may apply it wrongly, giving exemption. Some people will not apply because they didn't know this, which is good actually, knowing without knowing it. Correct. Because they know, oh, whenever clubbing of minor child will happen, we have to give 1500 and but they missed out that it is not available under default regime. By mistake, they gave it. Papa wrong answer. Clear. Some students didn't remember this only. They didn't consider it. Good only, na? Yes. Chalo, at least see if it is not available, at least give a note telling yes, it is available, it is there, but not available. Clear? Yes. So we need to compute the total income, only total income, no tax. Okay. Guys, gross salary is given, so you need to take care of standard deduction. Sir, two more deduction is there, no sir? Profession tax or entertainment allowance. Nothing is mentioned in the question. You cannot assume any figure. Please ignore it. So, income from salaries, 2 lakh. Income from house property, loss tax. So, interest on loan for self-occupied property is blocked. It is not allowed. Whereas loss from house property, 285. You can adjust it maximum only within the same year. Do we have any income under that house property? No. Sir, can I adjust it against salary? No. You cannot adjust it against other rates. But if you were following optional scheme, you would have adjusted maximum 2 lakh against other rates. But now not possible. Why? Is following default scheme. Forget about this. Note 1 I have given. Let us see. Loss from house property is not allowed to be set off against income under any other head while computing income under section 115 BAC. And such loss cannot be carried forward for subsequent years. So completely forget about it. Coming to PGBP. Profits and gains from business and profession 70,000. How did you get 70,000? 2 lakh into 35%. 65 is agricultural income, 35 is business income. Correct? Sir, what about remaining 130? It is exempt. Clear? See, in the suggestion answers, they have not shown it here. But what I suggest is show it under the head other sources, agriculture income, and then write less exemption under section 10.1. Agriculture income is exempt under section 10.1. Means you will not take anything to the outer column, but mention in the inner column. This is what we have earned, but we enjoy full exemption. But we enjoy full exemptions. Okay. So only 70,000 we are considering because 130 is exempt. Then retail business income is 120. So total business income is 190. We have a loss, 1 lakh, current year loss. Adjust it. Remaining is how much? 90,000. And we also have a brought forward business loss of 135. I can adjust it only to the extent of 90. Remaining, you cannot adjust it against other rates, carry forward. As it is a brought forward loss, you carry forward. Okay. So 0 is a taxable business income after adjusting all the losses. So remaining 45,000 carry it to the next year. Coming to capital gains. 2 lakh long-term gain is there, which is under section 112A. We have a short-term loss of 110. Can I adjust it? Yes. Remaining is what? 90,000. See, while calculating income, please include full 90. But while calculating tax would be 0. Tax would be 0. Why, sir? It is within 125. It is within 125. Actually, they have not asked tax calculation, but I'm just mentioning. Income from other sources. Dividend from Indian company. Have they given the net figure? Yes, dividend received is given. Look at the word. They didn't mention net, but they are told dividend received. Means received will be net figure or gross figure? Net figure. That is after TDS. So on this, what would be the TDS rate? 10%. So 13,500 minus 90% euro. Sir, how 90%? 100 minus 10%. 100 minus 10%. So the keyword here is received as. Received means you should consider it as net. Okay, so then lottery winnings, they have given gross only, straight away take it. Then income of minor son from special talent will not be clubbed. Will not be clubbed. We have given a note here. Okay, for all this you can see. Note 2. Dividend received is considered before TDS for calculating income as TDS is deducted at 10% under section 194. Then income of minor son from special talent is not included in current income since it is earned from special talent. Then where is it taxable, sir? In the hand of minor, sir. Clear? But parent has to act as a guardian, but it is taxable in the hands of children, sir. Then interest from bank received by minor son on the deposit made is includable in the income of Mr. Current under section 64(1)(a), as it is not earned with minor effort or talent and Mrs. Current does not have any income. So it will be clubbed with whom? Current tax. So please be careful. How we got the money doesn't matter, because you might think that, sir, whatever he is earning here from special talent, he has kept a deposit and from that he is earning interest. No. See, when minor children are earning any income, first check, is it because of their efforts, skill, or knowledge? If yes, no clubbing. If no, clubbing. With whom? Father or mother, whoever is having higher income. Okay. So, this 10,000 would be clubbed. For that, can father claim an exemption under section 1032? No. You can see here, I have mentioned and I have told, not allowed under default scheme. Okay, sir. So what is the income from other sources? 70,000. Clear? Yes, sir. So gross total income is 3,85,000 and deductions. They have given some information about deduction, but is following default scheme. Correct? So for this, can he claim deduction? No. ATC is eligible actually, but he is following default scheme. No. So it is not. So it is block. So block. So total income comes to 3,85,000. This is all about question number 10. Now question number 11. Come to question number 11. Mr. Anand question. Let me read the requirement first. You are required to compute the total income and tax liability of Mr. Anand under section 115 BAC, that is default scheme, or as well as under normal provisions for assessment year 25-26. Ignore AMT provisions. Okay, even if it is applicable, ignore it. But if this line is not given, if AMT is applicable, it is your duty to apply it under normal provisions. Under default, anyway, not applicable, but under normal provisions, you know when AMT is applicable now. If it is applicable, please apply. Yeah, but here they have clearly given ignore, please ignore. Chalo. So we are supposed to do under both types, default as well as optional. Let us read the information one by. Mr. Anand, a resident Indian, aged 45 years. Okay, resident it says. Has provided you the following information for the previous year ended 31st March 2025. He owns an industrial undertaking established in SEZ. Guys, whenever you hear the word SEZ, immediately takkanta, you should catch one thing: 10AA deduction. 10AA deduction. It is not exemption, deduction. And which had commenced operation during the financial year 1920. Guys, see, for those entrepreneurs who are engaged in manufacturing, who have set up their operation in SEZ only before, on or before 31st March 2020, they are eligible for deduction. But for the first 15 years, you should set up before 31st March 2020. Even after that, can you claim deduction? Yes, but for the first 15 years. First 15 years. Total turnover of the undertaking was 200 lakhs. Export turnover received in India in convertible foreign exchange on or before 30th September is 120 lakh. So we call this as export turnover. Okay. This industrial undertaking fulfills all the conditions of section 10AA of Income Tax Act 1961. Profit from this industry is 35. Guys, profit is total profit. We need to first calculate eligible profit. Eligible profit is nothing but the profit which is earned from export business. Sir, how much is that? Simple. Let me show it here. Okay, 35 lakh. This is on the total turnover of how much? 200 lakhs. In that, how much is export turnover received before 30th September 2025 in convertible Indian currency? That is from foreign currency, we have converted into Indian currency. How much is that, sir? 120. Only take that much. Only take that much. How much it comes to? Sorry? 21 lakh. 21 lakh. Can I claim fully? No. Check in which year we are there. Which is our previous year? 24-25. In which year the operation was commenced? 1920. Count it. Even 1920, how to count it? 1920, 2021, 21-22, 22-23, 23-24, 24-25. We are in the 6th year. When we are in the 6th year, you can claim only 50% of this. 50% of this. Hope you are getting it. First 5 years, full 100% of eligible profit. Next 5 years, that is from 6th to 10th, 50% of eligible profit. From 11th to 15th, 50% of eligible profit or the amount to transfer to special economic zone reinvestment reserve, whichever is lower. Whichever is lower. Hope you are getting it. That and all is not relevant for this question, but we are in the 6th year claim 50% of eligible profit. And this deduction is under the PGBP or from gross total income. From gross total income. First include entire profit under the head PGBP, but give deduction under chapter 6A. I mean, chapter 6A is separate. Wherever you will claim chapter 6A, you also show 10AA deduction. That is against gross total income. But if assessor is following default regime, no deduction. Under 10AA is not eligible, guys. So we need to do under both. One place there is deduction, that is optional scheme, but under default, no deduction. Next, Mr. Anand sold equity shares of different Indian companies on 14th March 2025. What is the date of transfer? 14th March 2025. New rate or old rate? New rates. Because the date of transfer is after 23rd July 2024. Oh. Name of the company, Sam Limited. Sale value 150. Purchase price 120. Acquired on 2nd February 2025. Purchased February, sold in March. Short term or long term? Short term. Correct, people? Short term. So number of shares 2000. So what should be computed? Short term capital gain. Under which section? 111A. Shares no. Hello? Shares no. So which section? 111A. Yes. STT also is paid. Condition satisfied. Okay. Next one. See, when they are given STT is paid at the time of purchase, it is understood at the time of sale also it would have been paid. Clear? And when you are purchasing and selling through Demat account, you will not pay it. They will automatically deduct. Clear? Yes. Chalo. Jam Limited. Sale value 100. 72 is the purchase price. When did it purchase? 16th April 2017. Long term. Correct, no people? Long term. So sale value is number of shares is 1250. FMV also they have given. It is relevant under section 112A, guys. It is relevant under section 112A because when shares are purchased, that is either of EFT is purchased before 1st February 2018, then we should also consider FMV as on 31st January 2018 to compute cost. To compute cost. Okay, sir. CIA and all they have given, it is just to confuse you. For capital gains which you compute under section 112A, no indexation. No indexation. Sir, what if it was before 23rd July? Even before 23rd July also no indexation. Under section 112A, no indexation. See, sometimes I had told you in the class, they will mislead by giving some irrelevant information. That is what here. Now what you think is, oh, as they are given, we need to consider it. And look at the beauty. For purchase year only they have given to confuse you. For purchase year and sale year they have given. Clear? So by mistake, you might apply indexation, guys. Please be careful, not applicable. Sale proceeds were subject to brokerage 0.1%. Is it allowed, guys? Expenses on transfer, allowed. Securities transaction tax of 0.125% on the gross consideration. So even at the time of sale, it is paid. But is it allowed? No. Under capital gains head, STT is not allowed as an expenses. Oh. Next. He made a payment of 90,000 on 1st September 2024. White check towards medical insurance as lump sum premium for himself and his wife till 30th August 2028 for number of years. He also made a cash payment of 7,500 towards preventive health checkup for himself and his wife. Guys, this is allowed even though it is paid in cash. It is still allowed, but maximum 5,000. Maximum 5,000. Coming to this, is it fully allowed? No. It is allowed proportionately. It is allowed proportionately. When health insurance premium is paid for more than 1 year, you claim it proportionately. Sir, how many financial year is involved in this? You calculate. How many financial year? Let me calculate. So 24-25, 25-26, 26-27, 27-28, and 28-29 also is there. Partially it will also come. Even though it is not a full year, still take it. Correct, people? Yes. So totally how many years? 5 years. So in the current year, how much is allowed? 90,000 by 5. 90,000 by 5. Hope you are getting it. 90,000 into 1 by 5. When health, I repeat, when health insurance premium is paid for number of years, okay, we call it as annuity. It is paid as annuity, lump sum amount for number of years. Allow it proportionately. Take the denominator as what? Total number of years. Okay, and in the total number of years, even a part of the year, consider it as full. Clear? So 90,000 can be claimed equally for 5 years as deduction. Clear? Under which section? 80B. 80D. Okay, sure. He received royalty of rupees 2,88,000 from abroad for a book authored by him in the nature of artistic. Okay. A rate of royalty is 16% of the value of the books, and expenditure made for earning this royalty was 40,000. Guys, for royalty deduction is available, but maximum deduction is 15% of the book value. 15% of the book value. He is getting a royalty of 16%, but it is restricted to only 15%. Clear? But they have also given some more information. He has incurred an expenditure of how much? 40,000. Is it allowed, sir? Yes, allowed. The amount remitted to India till 30th September 2025 is only 250. So can he claim full 288 as deduction or only 250? Whatever is brought to India within 30th September of assessment year. Clear? Yes, sir. 250. There are some calculations which I will explain along with the solution. He received income tax refund of 15,750, including interest of 1,750. So how much is taxable? Only 1,750 under IFRS. Relating to assessment year 24-25, doesn't matter. It might be relating to past. It is taxable when you receive it, but only interest. F. He occupies ground floor of his residential building and has let out first floor for residential use. Okay, ground floor is self-occupied and first floor is let out for a monthly rent of 15,000. He has paid a municipal tax of 30,000 for the current financial year. So 30,000 is only for let out portion or entire building? Entire building. So how much is allowed? Only 15,000 let out portion. For self-occupied, no deduction. Both the floors are of equal size. Okay, means they are told only half you can claim under. Okay, plinth area there. He has taken a loan from a bank of 50 lakh for construction of this property in 2020, and he has repaid 2 lakh 5,000, including interest 1 lakh. Remaining 1 lakh 5,000 is what? Principal. So for principal repayment, deduction is available under section 80C. Whereas for interest, house property will be you can. Okay, but please be careful. 50,000 is for self-occupied, 50,000 is for let out. But if assessor is following default, you can claim only 50. You can claim only 50 because for self-occupied, not allowed. Hope you are getting it. Yes, sir. Mr. Anand deposited 1,30,000 in Public Provident Fund, ATC, and 80,000 in 5-year term deposit in the name of minor son. For children's and all, no deduction. Minor or major, it doesn't matter, no deduction. FD has to be kept in the assessee name. If it is kept in someone else's name, no deduction for it. Clear? Minimum 5 years is there, provided FD is kept in the name of assessee. So for this, no deduction. For this, is deduction available? Yes, only under options. Only under optional scheme. Okay, guys. Chalo, we'll start solving. First, we are doing it under default scheme. Computation of total income of Mr. Anand for assessment year 25-26 under section 115 B, A, C. Okay. Income from house property first. There you have to calculate separately. Don't merge both. First floor, ground floor. First floor is what? Let out. For let out, they have given the rent. Let us assume that only as gross annual value, which comes to 1,80,000. 1,80,000. Municipal tax paid is 30,000. But for let out portion, how much? Equal share. So divided by 2. How much is that? 15,000. So net annual value 165. 30% of net annual value 49,500. Then interest on loan. Interest on loan 1 lakh is there. But for let out portion, how much? By 2. So 50,000. Claim it. So what is the income from let out portion? 65,500. Any doubt? Pavan. Chalo. You are lifting your hand. Self-occupied portion, ground floor. Ground floor. Annual value will always be nil. For the self-occupied property, no deduction for municipal tax paid. No standard deduction. Only go and eat interest. Under default regime, that is also not there. 50,000 is there actually, but under default regime, it is blocked. So no deduction for it. So what is the net income from house property? 65,500. Clear? See, instead of showing this, you can also give a note, but explain little in detail there. Clear? For self-occupied property, interest on housing loan is not allowed under default regime. Hence, income from self-occupied property would be nil. Clear? Yes. Then PGDP, income from SEZ unit, profit you take, full profit, not only eligible profit, full profit. Yes, take it. Don't claim 10AA deduction here. First of all, is following default regime is not eligible. Even if is following optional regime, it will not come here. Where it will come? Against gross total income. Okay. Capital gains. Short-term capital gain on the sale of equity shares, guys. What is the full value of sale consideration? Short-term, right? So how many shares are there? 2000 into sale value 150. So 2000 into 150. Sir, what is the purchase value? 120 into 2000. Just reduce. No indexation, nothing. Yes. So full value of sale consideration is 3 lakh. And brokerage is there. Please be careful. Brokerage is allowed. 0.1% of what? Sale value. Sir, what about STT? STT is not allowed as an expenses. Okay, just give a note for it. I don't think they have given. Okay, it is better you give a note for it. STT paid is not allowed as deduction while computing the income under the head capital gains tax. Okay, sir. So cost we will reduce. We will get short-term capital gain 59,700. Coming to long-term important, especially for cost calculation. What is the sale value, sir? Let us take it. This is long-term. Jam limited. So number of shares 1,250 into sale value and clear. Yes. For cost calculation, you need to take purchase price, FMV, sale value, everything. Yeah, yes, I will show you. Yes, first, full value of sale consideration is how much, sir? 1,25,000. Then brokerage paid on that is allowed as expenses on transfer. Expenses on transfer, 125. Coming to cost of acquisition, no indexation, but the pattern is different. Guys, this is only when EFT, which is covered under section 112A, is purchased before 1st February 2018. Because section 112A was introduced on 1st February 2018. Before that, whatever long-term capital gain you earn on EFT was fully exempt actually. Fully exempt. Maja. Huh. One second. Yes, here it is. Note. What is the cost of acquisition under section 112A? Higher actual cost. Or second point, lower of FMV. How did we get FMV? Whatever FMV on 31st January 2018, okay, which is 50 into 1,250. Compare that with sale value. Take whichever is lower, 60 to 500 or 1,25,000, whichever is lower, 60 to 500. Compare that with actual cost. Take whichever is here. Take whichever is higher. How much is that? 90,000. No indexation. No indexation. Hope you understand. Yeah. Sir, can I interchange this position? Yes. You can take first whichever is lower, compare that with actual cost, take whichever is higher. Anyway, ultimately you will get the same number. 90,000. 90,000. So what is the long-term capital gain? 34,875. Under which section? 112A. Please include it fully here. But while calculating tax, see why it is within 125. It is within 125. So total capital gains is 94,575. Then coming to income from other sources. Royalty from artistic book 288 minus the expenses. What is the net income? 248. Interest on income tax refund also is taxable. So 249,750 is other sources. Clear? Yes. So what is the gross total income? 39,09,825. Same thing will be the total income. Why, sir? Deductions under chapter 6A is not allowed. Okay, only 80cc D subsection 2, 80JJAA is allowed, but that is even 80cc CCH, what is that? Agnivesh Corpus Fund. Okay, CCD subsection 1, CCH subsection 2, and 80JJAA is allowed, but none of that is given in the question. So, whatever is there, 80C, 80D, or even for royalty income, everything is blocked under default regime. Okay, sir. So straight away total income is 39 lakh 9,830. And whenever you are computing total income, you are done. Now you are supposed to calculate tax liability. First check whether total income includes any special income. Yes. First calculate tax on it. Correct number one? Yes. Whenever total income includes any special income, it is there here. And please check under IFOS also if there is any casual income and all. Here actually it is not there. First calculate tax on it. Tax on long-term capital gain. Guys, this is taxable. Correct at 12.5%. But as it is within 1,25,000, zero tax. Zero tax. Is that clear? Yes, sir. So nil. Then coming to short-term capital gain. Is it special? Yes, it is special. Why, sir? It is covered under section 111A. EFT, na? Shares, equity shares. So it is a part of EFT. So 59,700. When did we earn it? After 23rd July. Old rate or new rate? New rate, 20%. 20% tax. So 59,700 into 20%. Got it? You will get 11,940. Now compute the remaining income, which is normal income, taxable at slab rates. How do we get it, sir? 39 lakh 9,930 minus 94,575. You will get normal income. Normal income, guys. Oh, apply slab rates. Apply slab rates. Clear? Yes. So you will get gross tax liability 8,46,517. Is surcharge applicable? No, sir. Total income is within 50 lakh. Is rebate available? No, sir. Total income is more than 7 lakh. So I add 4% health and education cess, which comes to 33,861. So for final tax liabilities 8,83,78. Round it up to nearest to 10, 380 as per section 288B. Hope you got it. Clear? Yes. Now coming to normal provisions. We will take GTI as per default scheme as a base. How much is that, sir? 39 lakh 9,825. Is there any changes? Let us observe. Salary income is there? No. This will change. Okay, for self-occupied interest is allowed there. Correct? Next. Anything else? Above that you check first. Above that you check first. Okay, nothing else. Nothing else. Deductions will come, but anyway, that is after gross total income. Interest on loan for self-occupied property, is it allowed? Yes. So, can it be adjusted? Yes, sir. Under optional scheme, it can be adjusted. So, we are taking it. So, we are taking adjusted against what, sir? Simple, guys. Here, instead of 0, minus 50 will come. Can it be adjusted against income from house property? Yes. So, that is why we are just taking negative. Clear? Yes. You can also give a note. Loss from self-occupied property can be adjusted against income from house property. That is let out property. Oh, then deductions, guys. Gross total income under optional scheme is 38,59,825. This part is important. Please pay ultra attention. First, deduction under section 10AA. How much? I guess I already explained that. How much is that, sir? 35 lakh is the total profit of SEZ unit into take the export turnover, which is received on or before 30th September of assessment year in convertible foreign currency into India, which is 120 divided by total 200. What do you get actually if you do this? Export profit. How much is eligible as deduction? 50%. Why, sir? We are in the 6th year of operation. We are in the 6th year of operation. I have mentioned here. You can see. Got it? Yes, sir. So how much is the deduction? 10 lakh 50,000. 10 lakh 50,000. 10 lakh 50. Yeah, yes. So please be careful. This is available against gross total income. Next coming to deductions under chapter 6A. ATC, repayment of housing loan, available. Then public provident fund, available. But for minors than whatever is keeping, for that, no deduction. I already told you. So total deduction under ATC is coming to 235, but it is restricted to 150 max. Maximum 150, guys. Okay, sir. Deduction under section 80D. This is also important adjustment. Guys, wherever you feel important, you can mark a star for it. Clear? I told you, please take a printout of this and solve it. Yeah, wherever you feel anything important, make a star mark. Make any mark so that when you're studying next time, you will focus more on that. Clear? Yes. Because what happens, guys, in total income questions and all, Most of the things you will can easily handle. 2-3 things will be a checkpoint where students normally get confused. So if you can manage it, full marks you can get it. Okay, sure. Now coming to deduction. See, totally 90,000 is paid for 5 financial years. So divide it by 5. How much is allowed? Only 18,000. Plus preventive health checkup is paid in cash, no problem. 7,500. But maximum restricted to 5,000. So take 5,000. Total is 23,000. Please be careful. The total of this also cannot cross 25. It is within that, allow. You allow it. Then QQB. Even this is one of the important adjustment. Royalty deduction. Royalty deduction, I told you, actually earned is 16% of the book value, but maximum allowed is how much? 15%. Check how much will be 15%. Whatever they have given is 16%, right? So divided by 16 into 15 you do 270. So maximum deduction you can claim is 270, but still there are other checkpoints. What are those, sir? How much he has brought to India within 30th September of assessment year? 250. So anyway, 250 is less than 270. We will focus on that. But 40,000 is already claimed as expenses. Where, sir? While computing the income. Okay. Already is claimed. Again, will we give deduction for it? No, it will lead to double benefit. Clear? Yes, sir. So how much is allowed as deduction now? 250 is what is eligible. But 40,000 expenses what we already claimed, we will reduce. Remaining is how much, sir? 2,10,000. Hope you understood. I repeat. See, he has received 16% as royalty, 16% of book value. But as per law, maximum allowed is 15%. So first calculate how much it will be if it was 15%. It comes to 70. This is the maximum deduction he can claim. But can he claim fully? No. Only whatever is brought to India in convertible foreign exchange on or before 30th September of assessment year, only that much he can claim. How much is that? 250. But now can he claim full? No, because 40,000 expenses he has already claimed under the head other sources while computing the income. While computing the income, reduce that much, remaining 210 he can claim. Remaining 210 he can claim. How did we get 210? 250 minus 40. Okay. Deduction under section 80 QQ Vikas. Got it? Yes. See, there is also RRB, that is on patent right. Deduction for royalty income is also there under section 80 RRB, that is for patent right. Whatever royalty you earn. So total income is 24,26,825, which we will round it off to nearest 10, 830. 830. Oh, yes. Fine. Now, here also we need to compute tax. Guys, special income will be same because we have taken same gross total income. So should we calculate same way, sir? Yes, same way you calculate again. Okay, because special rates will not change as per the scheme. It will remain same time. So calculate in the same way. But remaining income will change. Please be careful. What is the total income under optional scheme? 24,26,830. In that, how much is special income, sir? Capital gains income. 94,575. Deduct. Remaining is normal income. Remaining is normal income. Hope you are getting it. Clear? Yes. Especially you are doing under both, you may take wrong figures, guys. Please be careful. Maybe you pause for a second, think, and then do it. Don't do it in a hurry. Okay. Because some students might miss the special incomes here. Okay. Special incomes here. Why, sir? Because they didn't do it here. No, again. They may think that special income is not there. Guys, we started with gross total income. Gross total income already includes special income. We didn't adjust it again because it remains same under both. Clear? Yes. Okay. Sure. On long-term capital gain, nil tax. On short-term capital gain, same amount tax. So first calculate normal income. Hope you understood how we got normal income. Total income under normal provision minus capital gains, total income you reduce. Both long-term as well as short-term. Oh. Now, basic essential limit up to 2,15,000 nil. Apply the slab rates and calculate. You will get gross tax 5,24,117. Yes, sir. Then total income is less than 50 lakh, no surcharge, no rebate also because total income is more than 5 lakh. So straight away ahead, health and education says 4%. You will get final tax liability 5,45,082. Round it up to each nearest 10 rupees. And even guys, rounding off, they might not mention in the question that you have to take care. Sir, what if I stop it here only? At least half marks they will deduct. Please be careful. That extra step you should be aware. For both total income as well as tax liability, you should round it off to nearest 10 rupees. Sir, what if they are not given in the question? Normally they don't give it in the question. You have to do it. Oh, sure. Next, question number 12. Let me read this last line. Compute the total income of Mr. Raj for assessment year 25-26 under both the regimes. Under both the regimes. Yes. Mr. Raj, a resident in India, owns two house property, one in Delhi, another in Kanpur. The property in Kanpur is self-occupied. Please be careful when they give like this. Please segregate the information into self-occupied separately, let out separate. By Mr. Raj. However, the property in Delhi is let out. So Delhi property let out. Okay, Kanpur is self-occupied throughout the year. Oh. The particular of Delhi house. Delhi house is let out or self-occupied? LOP, let out property. They are given standard rent, municipal value, fair rent, rent received, municipal tax paid by Raj only. Very good. What should we do? Calculate GAV. Calculate GAV. What is the first step? Municipal value or fair rent, whichever is higher. Compare that with standard rent, whichever is lower. Compare that with actual rent, take whichever is higher. Very simple. Very simple, guys. Oh, you will get GAV. From GAV reduced municipal tax paid. Next. Municipal tax paid by Mr. Raj on 10th June 2024 for Kanpur house is 3,500. Kanpur house is what house? Self-occupied. Is municipal tax allowed as deduction? No, irrelevant. Mr. Raj had taken a loan. Okay, let me draw a line so that we will not again consider it. In the exam, in the question sheet, don't do anything like this. Okay, don't mark also anything. Maybe tick or star is okay, but don't write or don't mark anything like this. Clear? Because sometimes invigilators will unnecessarily trouble you also. Don't get into trouble. Okay, yes. Mr. Raj had taken a loan from SBI of 35 lakh at 12% per annum in April 2022 in the past for purchase of Delhi house. Which house? Delhi house. Let out. Oh. The stamp duty value of this house was 40 lakhs. Mr. Raj purchased a plot in Kanpur. Guys, they are trying to give int for deduction chapter. Deduction chapter. If stamp duty value is within certain limit, then for interest, you can also claim deductions. Clear up? Yes. Mr. Raj purchased a plot in Kanpur in May 2022 and construction of the Kanpur house was began in June 2022 and was completed in December 2023. Important. Started in June and completed in 2023. Mr. Raj took a loan of 25 lakh at 10% on 1st June 2022 for construction of this house. No repayment has been done so far for both the loans. Guys. For self-occupied, he has taken a loan. When did he take the loan? 1st June 22. When did he complete the construction? December 2023. When will the pre-construction period start? Date of loan. When will the pre-construction period end? 31st March, immediately preceding the date of completion of construction. When the construction was completed? December 2023. Immediately preceding 31st March is what? 31st March 23. This is called pre-construction period. For pre-construction period, whatever interest you have paid, you can claim it in 5 equal installment from the year in which construction is complete. Got it? Yes. Construction is completed in 23-24. So from 23-24, you can claim that year interest for that year plus 1/5 of pre-construction period interest. What is the pre-construction period? Check it. July, August, September, October, November, December, January, February, March, 9 months. That's all. 9 months. 9 months. So please calculate pre-construction period interest for 9 months. Divide it by 5. Claim it for first 5 years. During the previous year 24-25, Mr. Raj has earned a salary income of 18 lakh. Oh. Compute the total income under both the schemes. Fine, guys. So pay attention. Gross salary. If they are just given salary income, it is understood. It is before standard deduction. Okay, we are doing first calculation under default. So what is the standard deduction? 75. If question is silent, don't consider anything else. Just give effect to standard deduction. 75,000. What is the income from salary? 17 lakh 25,000. Next, income from house property. Please do separate calculation for let out portion and the self-occupied. Okay. Let out house first. Delhi. Delhi. What is the gross annual value? Simple. First calculate expected rent. How is it, sir? Municipal value or fair rent? Whichever is higher. Compare that with standard rent. Take whichever is lower. That is called expected rent. Compare that with actual rent. Actual rent is 15,000 into 12. Take whichever is higher. So what is the GAV? 1,80,000. Sir, can I do this by way of working out also? Yes. And then bring it here. Municipal tax is 5% of municipal value. Municipal value 2,05,000 into 5%. Take it. Net annual value. Deductions under section 24, 30% of net annual value, standard deduction, then coming to interest. They told interest is fully outstanding. So 35 lakh into 12%. 35 lakh into 12%, which comes to 4 lakh 20,000. 4 lakh 20,000. Sure. Next, full 4 lakh 20 we are claiming here only. Okay? Yes. So loss from let out portion is 3 lakh 1,175 lakhs. Next, we will come to what, sir? Self-occupied property at Kanpur. At Kanpur. Gross annual value for self-occupied property will always be nil. No deduction for municipal tax paid, no deduction for standard. Because 30% of zero is zero only, no? Correct? Yes. Sure. Only interest you will focus. Interest under default regime for self-occupied property is blocked. Don't worry about pre, post and all. That will come only under optional. Straight away nil. Straight away nil. What is the loss from house property? 3,01,175. What can you do? Forget us. Get to nil. Why, sir? Because he is under default regime. If he had income under that house property, he would have adjusted. But he doesn't have. So can he adjust it against salary income? No. Can he carry forward? No. Forget. Bad dream. 17 lakh 25,000. Deductions also is not allowed. Why, sir? Because he is following default. Actually, he is eligible for 80 EEA deduction for interest on housing loan. But he is following default regime, hence blocked. Hence blocked, guys. I have given a note for that house property loss. Loss from house property is not allowed to be set off against income under any other head while computing income under section 115 BAC, guys. Is it clear? So completely ignore this law. That's all. Okay. So total income was 17 lakh 25 year. So sir, should I straight away take gross total income and continue there? Guys, anyway 2 years is there. Better start from the beginning. Okay, because all these adjustments will change. Interest part especially. This and all will change. So even standard deduction will change here. So better do it from the beginning. Anyway 2 years only. No? You can do it. Yes. Computation of total income of Mr. Raj under normal provisions. So gross salary same we are taking, but standard deduction is 50 here under optional scheme. So 1750 is the income from salary. Okay, guys, GAV is same. Till GAV everything is same. So what I suggest for this kind of question is do GAV by way of working mode. Under both the scheme it will remain same. Again and again you need not show it. Again and again you need not show it. Oh. So till here everything remains same. Okay. So net annual value is this much. 30% of NAV is 50,925. Now important. What is the total interest? 35 lakh into 12%, which comes to 420. But under optional scheme, he is eligible for 80 EEA deduction. How much, sir? Maximum 1 lakh. So set aside 150 for this. Remaining you claim here. Remaining you claim here. 270. Why, sir? Because if you claim full 420 here, you will have a house property loss. Clear? Yes, sir. And house property loss, you can adjust it against other rates, but maximum 2. But if you claim it as deduction, can you claim it against salary income? Yes. So that is a better tax planning. Tax planning. Okay. So keep 150 first year, first priority. Remaining is how much? 270. Claim it. Sir, is he eligible for 80 EEA deduction? Yes, I have given a note, you can see. Here, this one. Since the loan is sanctioned between 1st April 2009 and 31st March 2022, when the loan was taken, just a minute. April 2022. April 2022. So is it within this period? Is it within this period? Yes, sir. And stamp duty value is within 45 lakhs. So can you claim deduction? Yes. This is over and above what you claim under house property. How much, sir? 1 lakh. 1 lakh 50 maximum. So we are giving it here. Got it? Yes. Remaining 270 here. 420 minus 150 there. Remaining years. Is that clear? See, sir, is it wrong to claim entire 420 here? No, but you missed out the tax benefit. You will miss out the tax benefit, guys. Is that clear? Yes. Chalo. Self-occupied property, we will straight away focus only on interest. What is the interest for pre-construction period? 9 months interest you calculate. 9 months interest, 25 lakh into 10% into 9 by 12. That is July 22nd, sorry, July 2022 to March 2023. 9 months. I already showed the calculation, now. Yes. So it comes to how much? How much it comes to? Calculate. Sorry? 1 lakh 87,500 divided by 5. 37,500. Clear? Because 1/5 we will take. 37,500. Now add it to current year interest. What is current year interest? 25 lakh into 10%. Entire loan is outstanding. So current year interest is how much? 250. Pre-construction period interest which I can claim now is how much? 37,500. Add up both. 287,500. Can you claim full? No. Restricted to 12. Self-occupied property maximum interest you can claim is 2 lakh. So remaining 87,500 can I claim anywhere? No. Loss. Got it? So you have a total loss of how much now? Year 151, 175 and year 2 lakh. So total loss is 351, 175. Clear? So out of this, I can adjust maximum 2 lakh against other rates. So I will adjust 2 lakh against house property. Sorry, salary. Against salary. So remaining income is how much, guys? 15 lakh 50,000. Clear? So there is a deduction of 150. So total income comes to 14 lakh. Sir, what about the remaining loss? Carry forward it to next year. You are under optional scheme. Can you carry forward? Yes. But once you carry forward, you can adjust it only within the same head. One important thing. One important thing I will tell you. See, here we consider 150 year. Sir, is it mandatory to consider? Yes, for tax planning for this question. Sir, what if by chance if GAV was huge? For example, where am I? Assume this figure is like more than 4 lakh 20, like more than 5 lakh. Can I claim full 420 year? Yes, no problem. Clear. See, if you have enough figure here, you can claim entire interest here only. Because for let out property, there is no restriction to claim interest. Just because I didn't have enough money here, I will get a huge loss. And when you get a loss, you can adjust maximum 2 lakh against other rates and remaining you will carry forward. Instead of that, you can get the benefit in the current year only. Which one will you prefer? Deduction. Which one will you prefer? Deduction. Is that clear? Yes. We are done, I guess. So we are done under both the schemes. Next, Rajesh. Question number 13. So let me read the requirement first. Compute the total income and tax payable by Mr. Rajesh for assessment year 25-26 under default tax regime as well as normal provisions of the Act. Both. Rajesh is a working partner in Sunflower Associates, a partnership firm. Rajesh has contributed 15 lakh as capital in the firm. Partnership deed authorizes payment of interest at 13% and also payment of remuneration to partners 20,000 per month. Guys, interest paid is 13%. How much will be allowed to the partnership firm as an expenses as per section 40B? 12% maximum. Sir, deed is mentioned in your sir, no problem. Maximum is 12%. What is allowed to the partnership firm is taxable in the hands of partner. So for Rajesh, how much is taxable? 12%. Under which head? PGBP. PGBP. Okay. Remuneration 20,000 per month and is a working partner, guys. Whole of the remuneration is allowable as deduction to Sunflower Associates. Means 40B, full remuneration is allowed. So how much is taxable for Rajesh now? 20,000 into 12. Under which head? Under which head? PGBP. There is no employer-employee relationship between partner and partnership firm. Where is it taxable? PGBP. Will we give standard deduction? Under PGBPIT, is there a standard deduction? No. Please be careful. By mistake, you may take standard deduction. No standard deduction. Standard deduction is only under the head salary. Here, even though they are receiving it in the name of salary, it is not taxable under the head salary. Why, sir? Because section 15 of salary head tells basic criteria for an income to be taxed under the head salary is employer-employee relationship, which is missing in case of partner and partnership firm. They are like principal and agent. Okay. Mr. Rajesh has set up a unit in SEZ in May 2018. That is in the financial year 18-19. Is he eligible for a deduction? Yes. He has set up before 31st March 2020, right? He is eligible. The total turnover, export turnover and net profit for the year ended 31st March 2025 were 120 lakhs, 45 lakhs and 7.5 lakhs respectively. Out of the export turnover 45 lakhs, only 40 lakhs has been received in convertible foreign exchange by 30th September 2025. So export turnover, should we take 45 or 40? 40. Whatever is received before 30th September. So how much is the eligible deduction? I will just mention it here. What is the profit? 7.5 lakh into export turnover, only 40 you take, divided by total turnover, 120. Sir, from total turnover also, should I reduce that 5 lakh? No, don't reduce it. Clear? This is, we call it as eligible profit. Into, I guess we are in the second installment, right? 18-19. Okay, first year is 18-19. Count. 18-19, 19-20, 20-21, 21-22, 22-23, 22-23, 23-24. 24-25. We are in the 7th. We are in the 7th. Is that clear? Yes. Or else simple math you can do. Simple. Okay, I will give the suggestion. 18-19 is the year in which we have started. Which is our previous year, guys. 24-21. Take either the higher or lower one. So for example, 25 you take. 25 minus 18, 19 you will. Not 18, 19. Clear? You will get the year. Or else take both the side lowest. 24 minus 18. Either way you take. You will get the number of years. Instead of counting like this, you can do this. Is that clear? Our previous year minus in whichever year the operation was started. Clear? Yes. Sure. Okay. That means here 50%. 50%. Because we are in the second 5 years. That is between 6th to 10th. Okay, sir. Let us continue. During the previous year 24-25, Mr. Rajesh has commenced a business of warehousing facility for storage of edible oil. The net profit of this business as per P&L account is 7,50,000, which is our base. The following items are already debited. Personal drawings as per 37, disallowed, add it back. Advance income tax paid, disallowed. As per section 40J2, disallowed. Anything paid under income tax law is disallowed, add it back. Purchase of warehouse building of 10 lakhs on 10th June 2024 for the purpose of storage of edible oil. Capital expenditure, disallowed. But on 10 lakh, allow depreciation. How much, sir? 10%. Add back 10 lakh, but reduce depreciation. How much, sir? 10 lakh into 10%, which comes to 1 lakh. The following items are credited to profit and loss account. So it has already increased your income. If it is not taxed under the PGBP, deduct them. Interest on savings bank account with post office, important. Exemption or deduction, both you have to take care. 15,000. Interest on FD with SBI, 50,000. Dividend from Indian company, gross, 32,000. All three are taxable under IFOS. So remove it while computing the income under the head PGBP. Deduct all. As it is already credited, profit has gone up, please deduct them. He has paid the premium of 60,000 on life insurance policy in the name of her married daughter. Okay, life insurance premium, 60,000. The policy was taken on 1st October 2018, 10%. The sum assured is 5 lakh. 5 lakh into 10% comes to 50,000. How much is paid? 60,000. Restricted. Deduction is allowed, huh? Yes. How much? Maximum 10% under ATC, which is 50,000. But when policy matures, if daughter is still alive, no exemption under 1010D. No exemption under 1010D. Why? At least in 1 year, more than 10% was paid. Not relevant for this question, but I'm just telling you. Even in 1 year, if you have paid more than 10%, then when policy matures, if the insured is still alive, no exemption under 1010D. Sir, what if insured is gone? Then fully exempt. fully exempt tax. So we need to compute total income as well as tax under both the schemes, guys. Sure, we will do it. First, we are doing it under the default regime. Default regime. No income at the salary, no house property. Straight away go to PTP. Income from the firm. Guys, income from partnership firm received by a partner is always taxable under the head PGBP. Please be careful. And what is taxable for partner is what is allowed for the firm. Whatever is allowed for the firm under section 40B, same thing is taxable in the hands of partner. So interest, what is allowed? 12%. So what is taxable for the partner? 12%. So 5 lakh, sorry, 15 lakh, I guess, no? Capital? 15 lakh. So 15 lakh into 12%, 1 lakh 80. Plus remuneration, they told the entire amount is allowed for the firm. So entire amount is taxable here. 20,000 into 12. So income from partnership firm is 420. Yes to Mohan? 420. 4 lakh 20,000. Profit from SEZ unit. Whatever is the profit included here. Deduction later. Deduction later, but under default regime. Thank you. Okay, just tell thank you. Ashton. Income from warehousing facilities. Even this will come under the head PGBP. Net profit as per P&L account 7 lakh 50,000. Income credited to profit and loss account, but taxable under the head income from other sources. So all these three figures are taxable under other sources. Sir, is this line mandatory, sir? Taxable under which head and all? Maybe not. You just tell income not taxable under the PGB. That is also fine. Okay, all three you remember. Then coming to advance income tax paid, disallowed. Personal drawings, disallowed. Purchase of building, disallowed, but on that depreciation is allowed. 10%. Add back full 10 lakh and claim depreciation. Yeah, yes. So you will get income from business 17 lakh 53,000. 17 lakh 53,000. All these three under PGB. Next, other sources. Interest on savings bank deposit with post office. Post office 15,000. Exemption under 1015 is how much? 3,500. Remaining is 11,500. 11,500. Now, see, under default regime, no deduction. But under optional regime, we can claim deduction for this under section 80 TTA. Yes, how much? Full 10,000. Maximum 10,000. Full. Why, sir? Because income included here is more than 10,000. In one of the question we claimed, I guess, only 6,000. Why, sir? Income included was only 6,000 or 6,500. I don't remember exactly that. Clear? If income included is less than 10,000, claim only that much. If it is more than 10,000, claim full flat 10,000. That is maximum. Maximum 10,000. Then interest on FD with SBI 20,000. Dividend from Indian companies gross 32,000 included. Gross total income straight away that will only become total income because no deductions under chapter 6A, guys. So total income is same. Coming to tax. Will total income include any special income here? No. Entire income, just cross check once. Okay, don't come. Every income is a normal. Okay, here also casual is not there. So straight away, entire total income is a normal income. Apply slab rates. Up to 3 lakh nil, apply slab rates. So you will get gross tax liability 5,85,950. No surcharge, no rebate, guys. Both are not applicable. So add 4% health and education cess, you will get 23,438. Then reduce 1 lakh advance tax paid. Actually, in my opinion, even TDS has to be deducted. Okay, so TDS would have been deducted because in the question they clearly gave a int gross income. On this, will TDS be deducted? Yes, 10% comes to 3,200. Actually, in my opinion, even that has to be reduced here. But in the suggested answers, in the RTP, they are actually not reduced. Okay, but at least give a note like this. If you see, better to reduce. Okay, but if you are not reducing, at least give a note. Okay, but don't worry, guys. Even if you reduce, it is actually not wrong. Don't worry. Actually, it is right. But they are missed out in the suggested answers. You need not worry. So that is why I am telling you, it is better you reduce or else given. Either of the two you. So final tax payable 5,19,780. If you reduce that 3,200, accordingly it will come down also. Clear? Further down. Now going to normal provisions. We are taking gross total income as a base. Okay. Any change in that? First you check. Any change in that? No, no change. No change as it is. As it is. Now, from gross total income, it will remain same. Gross total income under default regime and optional regime for this question remains same. Can we claim 10 AA deduction? Yes. How much is that? 7 lakh 50 into 40 lakh you have to take. Please be careful. Whatever is received within 30th September of assessment year, whole divided by total turnover. And as we are in the 7th year, into 50%. Into 50%. Can we do it by way of note, sir? Yes. Like one question we did like that. So it comes to 125. Then chapter 6A deduction. ATC, sir, for daughter can parents claim deduction for life insurance premium? Yes, he can claim. Okay, if you want, I will show you. Just a minute. Life insurance policy can be taken. Just a minute. You can see premium paid in respect of life insurance policy. This is under section ATC. Okay. Premium paid on insurance of life of the individual spouse and any child, minor, major, doesn't matter. Okay, now yes, deduction is available. See, why this I'm explaining is there is chances that students get confused. They may get confused. I will explain. Listen here. For life insurance, parents can take it in the name of children, but can children take it in the name of parents? No. Okay, life will tagomodu, but no deduction. Clear? No deduction. It is like you are taking life insurance for the person who gave life to you. No, no. Clear? Yes, because normally by the time children become independent, parents would have come to the later stage of their life. Correct. Aga very less people will take life insurance because not normally life insurance is taken when you are in 20s, 30s, or maximum 40s. Correct. Yes. So even if by chance, if children take life insurance policy in the name of parents, if premium paid, can they claim deduction? Illa. No. But children can take health insurance policy in the name of parents and claim deduction for it. Under ATD, there are two separate categories for assessee and family and parent separate. Is that allowed? Yes. Guys, simple logic you use. Guys, when children become independent, now parents would have crossed at least like 40, 50 age when medical becomes very important. So in that case, will we take medical insurance premium? Yes. So in that case, there is a chance of paying. Or even if you pay medical expenditure, if the parent is a resident senior citizen, you can claim 50,000 up to 50,000 under ATT itself. Got it? So please be careful. For life insurance, it is different. Health insurance, it is different. Clear? Life insurance, you cannot claim deduction for parents. Whereas health insurance, you can claim it. Oh, coming back. Yeah. Next, for interest on post office savings account, full 10,000 we can claim. Because income included is how much, sir? I already explained that, no? How much is included here? 11,500, which is more than 10,000, you can claim full. Now you might also get one more doubt. Sir, what about interest on FD? What is the age of the person? Not given. Assume less than 60. 80 is not available. 80 is not available. If he was resident senior citizen, then I would have given deduction for this also. Under 80 Clear? And in that case, even this also you can claim under 80 Both put together you can claim under TTP. Because same person cannot claim both TTA and TTP. Any one you can claim, not both. So can I claim 80 TTP deduction for both under 80 TTP itself for both guys? Yes. But provided the associate is a resident senior citizen. But in this case, not allowed. Okay, sir. So total is 60,000. Total income is 28 lakh 1,500. Entire total income is a normal income. Apply slab rates. Up to 2 lakh 50 nil, 2 lakh 50 to 5 lakh 5%, 5 lakh to 10 lakh 20%, more than 10 lakh 30%. Apply the slab rates and calculate it. Okay, sir. You will get gross tax liability 6 lakh 52,950. Add 4% cess. No surcharge, no rebate. No surcharge, no rebate because total income is less than 50 lakh and no rebate. Why, sir? Because total income is more than 5 lakh. Advance tax paid 1 lakh they have reduced. Even TDS should be reduced here also 3,200. Okay. Final tax payable. I have given a note for the TDS. Clear? Because in the subject answers they are not covered. Clear? Yes. Okay, sir. So 1 lakh you reduce, you will get final tax payable 5,78,068. Round it up to 70. Round it up to 70. One more thing is there. Don't stop here. EMT is applicable. Why, sir? Assessee has claimed under normal provision. Assessee has claimed 10 AA deduction. Is EMT applicable? Yes. Assessee is an individual and claim deduction under 10 AA. EMT is applicable. So please apply it. Total income as per normal provision. Normal provisions means you take it under optional scheme. Don't take it under default. Under default, EMT is not at all applicable. Don't worry. 28 lakh 1,500. Take it. For that, add back 10 AA deduction. You will get adjusted total income. On adjusted total income, what is the AMT rate? 18.5%, which comes to 5,41,403. Here also surcharge would be applicable if adjusted total income is more than 50 lakh. It is less than 50 lakh, no surcharge. So health and education says 4%. So what is the tax to be paid? 5,63,59. Reduce 1 lakh from it. Advance tax. Yeah. And if you are reducing TDS here, even TDS has to be reduced even here. Okay. Yes. So 4,63,059. Round it off to 60. Nearest to 10 crores. So which one should the assessee pay? Whichever is higher. Whichever is higher, which is tax as per normal provisions. Clear? Now you compare default and optional scheme and tell whichever is better. Whichever is better. Have they asked that? Just a minute, we will see. Rajesh question, right? Compute total income and tax payable by Mr. Rajesh under default and okay, they didn't ask any decision. They didn't ask any decision. Just fine. Tell it. So if he's following optional scheme, how much tax he has to pay? 5,79,70. Clear. Will he get any AMT credit? No. He cannot get AMT credit. AMT credit is only when this is more than tax as per normal provision. But when this is more, if you have credit, you can adjust. Question is silent about it. I cannot assume anything. Yeah. So assume that entire amount has to be paid. Got it? If by chance, if they ask you which one is more beneficial to the assessee, which one? So here it is 579. Just a minute. Here it comes to 519. Default is more beneficial. Default is more beneficial. Got it? Yes. So we have solved good number of questions on total income and tax liability, guys. I have seen whenever student couldn't clear their exams, they find it difficult to solve total income question. So that is why I have tried to cover good number of questions. You also make sure that you solve it individually, independently. Clear? So take a printout of this document and try to solve it. Number of times I am telling because I know you will not have time to solve it. Clear? If you want to do, you will definitely do it. So if you want to be successful, please try to work more harder, guys. So whatever is the remaining days, try to give your best and try to solve as many number of questions as possible. Not only income tax, not only total income, every subject, every topic. Try to solve more and more questions. And preferably, I tell you, solve the questions between 145 to 5 or even 2 to 5. Clear? Don't sleep, don't waste your time in between this time. Please solve questions between 2 o'clock to 5 o'clock because during that time your mind has to be full active. Clear? So please make sure that you will practice between those times and if possible take the mock test for full 100 marks between 145 to 5. Got it? Yes, sir.